Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng 2 trading around 0.2% lower. The Taiwanese index just above the flat line as well.
Donald Trump has said wants to do a deal with us. Now, here's the point. I have a deal. Done, done, done.
On the India-US trade talks, government sources have indicated that an interim arrangement is being looked at.
I do think that India benefits hugely if it can negotiate tariffs to a much lower level.
Now, Commerce Secretary Lutnick essentially said that have reached, and this was interesting, he said have reached a trade deal with an unnamed country.
Again with Bajaj Finance, the numbers were slightly below our poll. However, the key has been that the guidance for FY26 is lower than FY25.
Sensex is down about 0.25%. Small cap and mid cap indices were up about 0.25% yesterday.
I think it's more to do with smart money buying in and around the indices, the heavyweight indices level, rather than individual stocks at this given point in time.
We're trading at around 72,000. They're trading at 96 to 97,000 at this point in time. So nearly 24,000 of a jump up in last 1 year itself.
Data's banks are dragging. The Nifty PSU banking index is under deep pressure.
With Bajaj Industries, a weak set overall coming in from the company. When we look at the numbers, it's a miss across the board. Nifty mid-cap index is down nearly 0.3%. The small cap index too is reeling under a fair bit of pressure.
Okay, well, that's the day so far, and it's almost as if, at least if you look at the Nifty, we never started trading, right? I mean, 1 point change. That's how you got. That's what you've got on the index. It's how you started and where you are now. So very, very tentative markets for the second day in a row. Lots of numbers are coming through. I think the Vedanta numbers are flashing through, and I'm sure Nigel will tell us more in a bit. But there's a market to track as well. Stocks, of course, lots moving here and there, which will be the focus. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Surabhi and Rima with me in the studios here. Nigel from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. We've got a few indices also moving. So the mid-cap index is down 0.5%. The small-cap index is down 1.25%. And banks is struggling. The Nifty banking index is down nearly about 250 points. And then you've got a slew of individual stocks, the Bajaj Twins, Trend, BPCL, so many others reacting to earnings both sides.
You know, April belonged to India. April was we were the rank outperformers, almost 5% up on the index. But it seems the fag end of April, India seems to be taking a bit of a breather, because even today, if you contrast our performance with global markets, most have managed a gain of about 0.25%, 0.5%. Asia, Europe is trending slightly higher. I can see the FTSE, CAC, DAX, mild gains on all these indices. But I think here, for now at least, the bulls are just taking a bit of a pause. Nigel?
Well, that's right. Just a couple of factors. It seems like a quiet day. But don't lose sight of the India VIX. The India VIX has been gradually moving up. The last time I checked, it was up more than 5%. And that's giving you a sense that there is some fear in the market. After this big run, the VIX is up. Normally, if you see the markets a little bit higher, the VIX should cool off a little bit or remain more or less flattish. The VIX has moved up. So that's one indicator. The other point I wanted to make is on Vedanta. Actually, these numbers look quite good. The absolute EBITDA number as well is good. If you look at the aluminium EBITDA, it's coming at around 4,800 crores. We were penciling a number around 4,400 crores. So that's a clear beat. The oil and gas business, well, we were factoring around 1,150 crores. It's coming at around 1,200 crores. So that is well in line to a little bit better. And the third number we are looking at is the international zinc business. Even out there, that's coming at around 400 crores. So X of Hindustan Zinc's numbers, which are already in the price, Vedanta's numbers actually look good. But as we say always for Vedanta, the numbers are not a big move out there. The question is, how is the demerger progressing? How is their balance sheet looking? And what is the promoter intent? For the numbers, though, it gets a thumbs up.
Okay, all right. For the time being, stocks moving slightly higher. This mid-cap decline that we're witnessing today, the index is down 0.8%, and the advanced decline ratio is really weak. So you'd have to say that some of these internals in today's trading action are not very inspiring. And also, it's the second day in a row that the Nifty seems to be meeting complete exhaustion at these levels, exactly unchanged from yesterday. not able to take out that congestion zone or the resistance zone around 24,400. In terms of key losers, look at KFIN. KFIN reacted quite, badly to numbers yesterday. It's down another 5% today. Westlife Food, 5.5%. Praj Industries, you heard the management in the morning. Company is going through a transition, they say. Stock has been knocked out again, 8% lower. Shoppers Stop, another result casualty. Shoppers Stop is down almost 7% at this point in time. So lots of names. Electronic Smart, 5%. So lots of names where wherever earnings are weak, there's definite profit taking. Otherwise, also a fair amount of caution in the broader market. So let's kickstart the action then. We have Mitesh joining in. Mitesh, good afternoon. What would the advice be? A lot of people have been waiting for the index to take off again, but the long trades aren't working. What's your call now?
Good afternoon. So I think, the long trades worked entirely for the last about 2 weeks. And now I think, the indicators are getting tired, especially on the hourly to hourly charts. So I sense that there should be at least a good chance to consolidation, which could span for a few days. And now the next trigger will come once we get a closing about 24,450. Else, good chance that 23,850, 24,400 is the broad range which you are looking at, which could be in source for the next 2 days to come by. So the markets might just consolidate, and therefore the idea is that on the index, as it comes down towards the lower end of the range, then look for a reversal sign and try to take a long position. On the stock side, I have a sell on Exide with a stop at about 360 for targets of 340. And Bharti Airtel is on the buying side. Recommend buying here, the stop just below levels of 1830 for targets of around 1900.
Okay, Exide tanked after its numbers, and Bharti Airtel has seen a spike up today. Indus Towers reports their numbers, and Indus Towers is now a subsidiary of Bharti Airtel, and Bharti Airtel has been a big outperformer. In the last 1 year, Bharti Airtel has gained close to 40%. But let's talk about Varun Beverages. They reported a revenue growth of 29%, driven by an organic volume growth of 15.5% in India and 13% in the South African business over the last 4 quarters. Mangalam joins in with the details. Mangalam.
So Varun Beverages reported its first quarter calendar 25 numbers, and the stock after an initial dip saw a recovery, and here's why. Because the consolidated sales of the company grew by around 29%, and it was aided by the South Africa acquisition. More importantly, overall volumes grew 30%, but organic volumes grew by 15.5% in the quarter. We heard from Coca-Cola how, India's business was aided by Mahakumbh. Case in point, Varun Beverages also would have seen a benefit from that itself. But more importantly, ahead of summer, they've increased their capacity. So that should aid them in the quarter that we're currently in, which seasonally is the strongest quarter for the company. A 29% revenue growth, margins which are absolutely flat. We had, net profit for Varun Beverages grow by around 33.5% in this quarter. Some of the internals were strong as well. The South Africa business that we're talking about grew by 13% over the last 4 quarters. Importantly, India realizations improved by about 2% as well. And they've initiated distribution and sale of PepsiCo's snacking products in a couple of these African nations. And they've commissioned new facilities in both Kangra and Prayagraj ahead of the summer season. The most interesting highlight that came in from the numbers, however, was the massive shift that we're seeing towards low sugar and no sugar options. Nearly 59% of the company's volumes come in from no sugar products or low sugar products. Now, even if you discount the 30% that they sell from Aquafina water, it means that of the carbonated soft drinks that they sell, 50% opt for no sugar options. So that's a healthier underlying mega trend. That's something we'll watch out for. Do you like sugar in your drinks or no?
Well, not me. What about you guys? I know you like at least sugar in your coffee.
Not too much of it.
Not too much.
Yeah, can't afford more.
All right.
We've got Deepan now joining in. Let's get his sense on the stock as well. Deepan, hi, good afternoon. So Varun Beverages is one, actually a whole raft of earnings over the last couple of days, right? V-Mart was pretty good. Vishal Mega Mart I'm talking about. Shoppers was bad. There's Trent where the market's still a little disappointed. What stands out for you? And a specific take on Varun Beverages if you have it.
Yeah, good afternoon, Surbhi, and thank you for having me on your show. I think great set of numbers from Varun Beverages. And look, we're looking for ideas in the FMCG space. This truly is a great FMCG company to buy, other than the HULs and the Nestle's, and we've seen what numbers have come over there. And I think there's still scope for growth because the Africa market, they're getting into Zimbabwe as well. And even in India, I think the penetration levels has still some way to go. From a valuation perspective, of course, it's expensive at about 63 times or so, but nonetheless, a great business to own. Having said that, it's a company in which we and our clients are invested in. Another company in which we have an interest in, where I thought the numbers were very, very impressive, was India Mart Intermesh. And I think we had, 2-3 years ago, we had this concern that their expenses were growing at a rapid pace as they were investing in technology, they were investing in manpower, and they were taking on the competition and expanding their business. But the way the operating profit margins have moved up in this quarter, last quarter as well, but more impressively this quarter, it does suggest that now they are over that particular hump where they were to increase expenses to keep the business going. And now we are seeing great operating leverages play out for India Mart. Valuations also extremely attractive for a platform company like this. And I would say great competitive position. Whatever threat was there from Just Dial or Google or artificial intelligence or Chat GPT, I think all of those seem to have been put to rest. So very positive on that company. But again, the disclosure, we and our clients are invested, so our views are biased.
India Mart has also taken quite a fall. If you look at it over the last 1 year, we should pull that up as the company's paying subscribers continue to remain under pressure. Dipan, what the management said in the conference call on the margins is that currently margins are about 38 to 39%. That's on account of lower subscriber acquisition costs. But as the paying subscribers start coming onto the platform, then margins will normalize and they'll come down to levels of about 33 to 35%. But yeah, they are trying to fix the platform and get in the paying subscribers. So that's India Mart, a stock that he likes. What about Bajaj Finance and Bajaj Finserv? Is this a buying opportunity?
No. See, again, Bajaj Finance is a company in which we are invested in and disappointed with the numbers. See the pre-provisioning, up to the pre-provisioning profit, when you read the numbers, you look happy. It's looking fantastic, great industry-beating numbers on all parameters. And then you have a 78% or thereabout increase in NPA provisioning. And this has been the situation for last several quarters. I thought, okay, next quarter, the NPA provisioning will normalize in line with the growth in pre-provisioning profits. But that's just not happening now. I don't know when it will happen. But nonetheless, I think, we are not exiting our positions at this point of time because the momentum is there, the business momentum is there, and they have taken excess provisions for NPA. So, we all remain in hope, and we hope that eventually, maybe a quarter or two down the line, the provisioning requirements will come down, and that can result in a very good spike in the profitability on a net basis.
Okay, all right. Hi, Dipan. Good afternoon and good to see you. When Vedanta reported its numbers, they look pretty good, actually. The absolute EBITDA number has beaten yet again. But as we know, the EBITDA beat is not really a driver for the stock. However, valuations are comfortable. If I look at all the three segments, X of Hindustan Zinc, aluminium, oil and gas, as well as the international zinc business, all of them are better than what the sheet was working with. There's a mild debt reduction. And the demerger is there by September 2025. Enough to attract you, or you want to stay away?
I think the demerger will provide a nice unlocking opportunity, and it will put to rest all concerns around the holding company debt as well. And on the whole, I think numbers are very impressive. Valuations also reasonable. But look, we are in a very uncertain global environment. And if you look at some of the non-ferrous metal prices, they're all declining or sliding lower. And if there was to be a recession in US, in China, and Europe because of Trump tariffs, some dislocation over there, then we could see a further correction in commodity prices. And that's not great news for Vedanta. So I'd be a bit cautious, but I don't think that cautious to exit out of a long-term position. So investors who are invested on long-term basis in Vedanta and who are prepared to ride out 1 or 2 years of uncertainty because of Trump tariffs, I think they'll be eventually rewarded. But from a fresh investment perspective, I think I'd give it a pass.
All right. Deepan, you may want to listen to the next one. It's not tracked that much. I'm talking about GIC-RE, which is the reinsurance company. What we're picking up, of course, is what the general insurance companies are really demanding for. I mean, they'd like this to happen. They would have liked this for it to happen for a long time now. All source-based, but sources tell CNBC-TV18 that general and health insurance CEOs will meet the Department of Financial Services Secretary on the 7th of May with, some demand, which, if it goes through, is not exactly great news for GIC-RE. I'll let Yash do the explaining. Yash, over to you.
You rightly pointed out, Prashant, the meeting between general as well as health insurance CEOs and the Department of Financial Services Secretary M. Nagarjuna is scheduled for May 7th. One important demand which the CEOs of the insurance companies will have is removal of obligatory premium which they pay to GICRE. How does this obligatory premium really work? Essentially, every health insurance or every motor insurance policy which is sold, if 100 rupees is the premium which a general insurance or a health insurance company receives on the back of that policy, 4 rupees, which is 4%, has to be paid to GICRE. Of course, they get reinsurance support proportional to that 4% premium which they pay to GICRE. Health and general insurance companies will put forth a demand of removing this compulsory obligatory premium of 4% which they have to pay behind every policy sold to GICRE. Why does this become important? Particularly for GICRE, because in FY24 itself, GICRE collected a total obligatory premium of 1500 crore rupees. Now for reinsurance, we are in a scenario where there is competitive intensity which is increasing, which is making business difficult for GICRE and impacting the growth. On top of that, if at all this demand for removal of obligatory premium goes through, then it could be a bigger negative coming in for GICRE.
Any thoughts, Deepan?
No, as it is, I'm weak in insurance companies. It's kind of out of my syllabus, if I may say so. So I'll give it a pass here.
Or for life insurers as well, there are actually a couple of things over the last two or 3 days which we've reported. That entire bank assurance sword which was hanging. You know, the finance minister was on record saying, then IRDAI said that, selling insurance policies through banks, I mean, it's got to be curbed and it should not rely too much on the channel. I think that threat has gone away, as we reported. And that was a big regulatory risk this year. So, but that is life, and stocks actually, compared to the rest of the market, relatively this week have done well. But that is insurance for you at this point. Deepan, the other big talking point, of course, has been geopolitics with, of course, what's happening at the border. Wide acknowledgement that no one really thinks there's a full-scale escalation which will happen, but still there is nervousness, I think. No doubt about it. Somebody was pointing out that the Pakistan stock index is down some 2.5% today. Late last night, there were some comments saying that over the next 24 to 36 hours, I think the foreign minister or someone essentially said that they're expecting some escalation. Any thoughts here? How to think about it?
No, these things are very difficult to predict, Prashant. And, it's very unfortunate what has happened in Kashmir. But, we are aware of all these risks. Investors are aware. And, we've seen the markets kind of calm down after any such action. And that similar situation will play out this time around as well. So, but yes, there is always this tension that something can happen and that may affect the sentiment per se, although not the earnings or the fundamentals of the economy per se.
Okay, all right. That is on the defense space. Deepan, by the way, before we let you go, let's talk about the big Nifty losers, Bajaj Finance and Finserv. What do you think went so wrong? And is this something that you will extrapolate to other NBFCs as well? Shriram had a bit of a tough going, but PNB Housing was a stellar set of numbers. I remember the stock popped 8% there. So now, within the NBFC universe, what would you pick and what would you avoid, going by the trends we've seen this season?
I still have kept my faith in Bajaj Finance and Chola as well. And hopefully these are transient issues where like 70-80% increases in provisioning is just kind of, this phase that which they are in. And eventually it'll get normalized to 25-30% growth in NPAs. So from that point of view, we remain committed to the sector per se. But these are unusual situations, and these surprises or negative surprises can pop up at any time in any financial company or any lender. I mean, see what happened in IndusInd Bank also. I mean, who would have thought that this kind of irregularity would be noticed? And similar things do play out. So these are the risks of investing in banks and NBFCs. And that's the reason why they trade at low PE multiples also, despite, having a decent growth trajectory. But you have to just live with it because point to point, these companies do create value. So just have to be patient in them And I still maintain that investors need to be overweight banks and NBFCs. Maybe 30-35% of the portfolio should be in these two counters. And some of the benefits like lower interest rates, lower taxations have yet to accrue, and better monsoons also have yet to accrue in the quarters to come. So, I mean, we all live in hope.
IndusInd Bank has recovered more than 3% from the day's low. It was down 2.5%. Now it's back in the green. Today, MK downgraded the stock. They're saying the CEO resignation derails hopes of a smooth transition. So that's what makes them a bit circumspect. And remember, the stock had rallied close to about 40% from the time the news broke, and it tanked. IOC numbers up for you on your screen. Margins looks like a beat, a big beat.
I was just looking at the preview that Suret put out. They've blown past expectations, much like BPCL. It was a complete out-and-out beat. Margins, EBITDA, everything is much higher. The profit number that we were working with was closer to about 2,400 odd crores. Profits were expected to decline. In BPCL's case, things really moved higher because A, the GRM business, the refining business just fired up. BPCL had delivered GRMs of over $9 a barrel, which was like way past all street expectations. So probably, for IOC as well, refining has really fired. BPCL also got the added leg up because one of their refineries, there was a maintenance shutdown happening, that came back on stream. But this is looking phenomenal. And of course, there are marketing gains. Inventory gains, marketing gains. So I think, the oil marketing and refining companies are really raking it in, at least in Q4. Looks good.
Looks good. Dipan, you want to quickly comment on BPCL or IOC? Look at the way the stock is spiking.
I think you can see a good trading rally in these companies, but end of the day, they are not great wealth creators, and long-term returns are below subpar, below the indices as well. So, but yes, there's a trading opportunity in these companies, and investors and traders can certainly take advantage of it. And as we said, it's been a patchy earnings season. So maybe these are the few winners which have emerged so far.
With, of course, OMCs, the trigger before the earnings, of course, has been markets have been waiting for those unpaid LPG subsidies to come in. It has still not come in. We spoke with Mr. Hardeep Singh Puri, the oil minister, some time back, and he said, well, it's imminent and it will come. But so far, it has not. IOC, 139 or so, about 2% higher. Deepan, we'll leave it there. Thank you very much for your time. Enjoy your market holiday tomorrow. We'll speak again soon. Before we slip into a break, here's some good news. Network 18 has beaten Times Internet to become the #1 news publisher on Comscore. News 18 has raced past the Times of India to be the #1 news brand in the country. That's not all. At the Social Plus on platform leadership network level, the Network 18 is the runaway leader as per Social Plus MMX Comscore report for March 2025 with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, which is at 202 million. News 18 was also raced past Times of India in terms of Social Plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall with 183 million unique views as per the Comscore report for March 2025. Welcome back. Rajesh Kothari is now with us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you with us here. Thanks very much for your time. I mean, I think last interacted on the editors roundtable on that Friday, and the mood was so different, right? It was, and how the mood's turned, and for the positive, for the better, and that is what markets are all about. But what have you been doing, Rajesh? We spoke about a few ideas, few opportunities back then. Give us a sense of what you've been up to with the fund. Any names you've added, anything you've added on, or in terms of what you already owned.
Yeah, well, I still remember that Friday roundtable discussion, and if you remember on that day also, we explained that during COVID also, in first 7 days, market discounted the worst effect. In Russia-Ukraine war also, in first 90 days, market discounted the worst effect. And I said this time is not going to be different. Donald Trump 75 days were over that time when we did the roundtable. So I think now Mr. Trump is a kind of a discounted story. In fact, there are many guys, they are terming him as a, reversal godfather. He's a godfather of doing reversal things. So I think that is now behind us as from market perspective. Effect on economy, nobody knows. It may continue for 2, 3, 4 years. I think the domestic-driven economy, domestic-driven sectors, that will do much better compared to the globally linked businesses, like what we discussed last time. So those are the sectors, on which we have been increasing our weightage. The banking is one sector, which is our largest holding right now, on which we are positive. The second is the pharmaceutical, more domestic linked businesses, the CDMO space. That's very interesting. So that's the second sector where we are increasing the weightage. Third is the consumer discretionary. And I think the discretionary sector in general has been doing reasonably well. And I think there is a solid earnings growth coming on the few pockets of consumer discretionary. So that's the third pocket. And the fourth is, select, capital goods companies which are really focusing on HVDC kind of a micro segment, the metro trains, Scott transformer related segment. So this is basically the few pockets on which, we have been increasing our weightage in last, I would say 2, 3, 4 months.
Okay, banks, CDMO, consumer discretionary, and power and areas like HVDC, Hitachi, etc. we've spoken about in the past. We'll just come back to you, Rajesh. Numbers are trickling in. IOC was the last. Sudarshan is here with quickly explaining the numbers to us. So over to you.
So we were expecting, basically our estimates were suggesting that IOC may report a mixed set of earnings, but after BPCL, which had reported a strong set of earnings led by refining, similar picture is being seen with IOC as well. Refining continues to be strong for these OMCs. And here also, if you take a look at gross refining margin, the estimate was that gross refining margin may come in the range of $4.5 to around $6 per barrel, but company has beaten the estimates, and gross refining margin has come in at almost $9 per barrel, much higher than the expectation. Even on the revenue, EBITDA and margin front, revenue has also come in higher than estimate. It was at 1.95 lakh crore versus our estimate of 1.91. EBITDA has come in at nearly 14,000 crore against the overall estimate of nearly 8,000 crore, and margin has come in at 7% against estimate of 4.10%. Also, if you take a look at both the throughput, refining as well as the pipelines, at both the places you will see an improvement not only on a sequential basis but also year on year. So overall, it's a very strong set of numbers from two oil marketing companies that have reported earnings so far. Both BPS and IOC have reported a strong set of earnings. So we'll be taking a look at when HPC announces the numbers, and if it announces a similar set of numbers as these two companies have announced.
Thank you very much for that. And Sudarshan, in terms of the LPG under recovery, who is most exposed? So when that under recovery comes, who is likely to see the biggest benefit?
So amongst all, 50% of the total compensation LPG has an exposure to. So whenever the government decides to compensate for that, IOC would be the biggest beneficiary.
Okay, thank you very much for that. Rajesh, you've not mentioned oil marketing companies in the preferred sectors, but tactically, is there any opportunity? IOC, BPCL, and plus there is the trigger awaited of the LPG under recovery.
I think, these are the businesses on which generally we do not take exposure because it's very extremely difficult to predict the crude oil price, the refining margin, and the government policy in terms of how much to recover and how much not to recover. So I think all these are more policy-led businesses rather than pure economics. So generally speaking, we avoid investing in refineries and marketing kind of companies.
Okay, all right. Rajesh got that point. Markets actually seeing a little bit of green right now, about 50 points up on the Nifty at this juncture. So, Rajesh, what else? I mean, where else are you looking for opportunities where at least there is some decent earnings visibility? Because lots of sectors like consumer, etc., they're still going through a rough earnings patch. So, what is on your radar?
So I think there are few sectors where you are clearly seeing the very strong earnings growth. Look at, for example, the consumer discretionary space, and two retail companies have already announced their numbers, and both have reported a 25% plus revenue growth. And one of the companies, of course, the largest company, even on a high base, they have reported 25-30% growth. So I think it is a solid number reported by the largest company, and of course, even second retail companies reported 20% plus growth. So consumer discretionary, few pockets within that is doing extremely well. That's first. Second, look at the affordable housing segment. Again, three banks and also the two large NBFCs which are into affordable housing segment has reported strong numbers. So I think the housing segment is going to do extremely well. And third, well, of course, the numbers are not yet announced, but we are expecting a positive growth momentum to continue, is the healthcare and hospital segment. And I think even this segment will report good double-digit growth. Please remember the Nifty this year, FY25, Nifty earnings growth is going to be only 4-5%. It means the economy is actually a little bit struggling. And against that 4-5%, these are the housing finance companies or the retail companies, apparel side particularly, they are growing and reporting 20-25% growth. One of the company which is into the soft drink, the reported numbers today, has again reported very strong numbers. There was a market narrative that one other player has entered and therefore there is going to be tough competition, the price war will start and all that stuff. But look at the company's numbers. The narratives are different and the actual delivery is completely different. So if these companies are growing at 25% plus in an environment where a consumer is kind of slowing down as per the narrative, I think it is a fantastic show by a few companies. So, bottom-up strategy is going to work over the next 12, 15, 18 months. And these are opportunities where we are looking to add.
Rajesh, take that point, but specifically on retail, this large company that you spoke of, I know you won't get into individual names and stocks, but I mean, let's say if you're talking about a stock like Trend, and yes, the company is still showcasing 25-30% sort of growth, but the argument now is on valuation. Does this market have the mood and the appetite to still keep buying stocks at 70-80 times? Because the earnings growth rates are no longer 50-60%, but they're 30%. 30 is not bad. But then again, at what price?
Very good question. And let me give you some data. The Nifty is reporting 4% earnings growth. The Nifty is trading at 19 times price to earning multiple. It's 5 times PEG. Let's talk about Nifty normalized earnings growth of 11% next year. And Nifty is trading at around 20 times. It's 2 times PEG for 11% growth. Look at S&P 500. It's trading at 1.8 times PEG. So in a growth phase, you have to look at PEG because we are not buying 2% growth companies. Am I right? And look at any other company. For example, the India's largest IT company, what is going to be earnings growth? 7%? And what is the price to earning multiple? 22 times? 3 times PEG? Now, Trend, for example, what you talked about, please put a disclaimer, is growing at 25-30%. And if you look at the FY26 and FY27 valuations, they are below probably the Nifty PEG. So that's where you make money, because on a growth companies, you need to look at PEG with, of course, ROE and underlying balance sheet. And that's where all these companies, and they have been the biggest winners for last 3 years, 5 years, 10 years. Small correction, of course, will be there. Some disappointment in between SSG growth and micro analyzing of each number and penalizing company, fine. But after 1 year, where you will grow? You have two options. Either you invest into India's largest FMCG company, which is struggling for 5% revenue growth and 10% profit growth, and you buy at a PE of 50 times and feel happy. Or you buy a company which is growing at 30% at a PEG of probably less than 2.5 times. I think you make probably more money over there. Of course, if they continue to report growth, if that assumption goes wrong, then even if you lose money, even in that case.
That's an interesting argument, a solid one at that. If a company like Trend says growing at 3 times PEG, price to earnings growth, which is still lower than the Nifty PEG, so then maybe you're not that bad off. It's an interesting lens and one that investors must perhaps keep in mind. Nigel?
Well, Rajesh, just one question from my end. In the past, I recall you all have played this travel and hotel theme. The travel stocks, they could pull back a little bit. If I look at Interglobe Aviation, that's pulled back a little bit from the recent peak. There's going to be a bit of a skirmish on the border. So some of these hotel stocks a little bit nervous. The luggage makers are a little bit nervous as well. Would you use this as a buying opportunity?
So probably there is still going to be some wait period over there, particularly in the luggage industry side, because the price war between the top three players is still ongoing. And, on the other side, some consumption slowdown. So the macro is not going to be that strong. And in between, the two players are a little bit trying to do price war. The inventories are still very high in the system. So we need to wait for the right time as far as luggage industry goes. As far as hotel industry goes, we do not have any exposure to, the hotel industry. And probably, I think the best of the realization is probably behind you. The best of the peak capacity utilization, because now many other hotels are also expanding, right? So one need to do a little bit more demand supply analysis before taking the final view. Currently, we do not have any exposure to either of these sectors.
Got that. By the way, in the CDMO space, Rajesh, what's the pick? We have a few listed players.
Yeah, so please put a disclaimer. So we are holding Suven for quite some time. And we believe, I think the overall opportunity is very strong. The opportunity is very big. And there are only few players who basically has a 30% plus kind of a margin profile in this kind of a businesses. And, forget China plus one, even the orders which are otherwise what Indian companies are getting, and because of the acquisitions, the new capabilities what these companies are winning into, I think you have a very, very long, roadmap over the next 3, 4, 5 years. So the growth is going to be compounding. And as you grow, the opportunity to participate into the larger size molecule, that comes basically handy. So, from, $10 million to $20 million to $100 million. So as you enter into different niche segment, the opportunity becomes really very big.
You're talking about Suven Pharma, right, Rajesh?
Yeah,
Suven
you're
Pharma.
right. Yes.
Okay. All right. Got that. Thank you very much, Rajesh. Appreciate you joining in. And of course, full disclaimer, as Rajesh himself pointed out, he'd own the name in their fund. So please do your diligence before you decide to take action if you do. Well, we'll take a quick commercial break here. Markets, of course, are up sharply as we go into the close. It is the last 30 minutes or so. And it's come up from about 240. Weekly expiry, perhaps the reason. 24,330 is where we were about 20 minutes back, and we're at 24,375. So that's the bump. We'll come back, get you some trading ideas with a technical expert. Stay tuned.
In 6 years, to go from starting from scratch to being able to take this business global, I mean, it's a turbocharged journey.
The first US thought came to us back in 2019 when Trump 1.0 and there was 25% tariffs on China. Okay, now with this 25% tariff, can India compete with China? Because we have this 25% delta. Started with like one person spending like full time into that market, talking to a bunch of customers. The second wave of COVID is when we experienced acceleration.
We're now at Trump 2.0.
Yeah.
Tariffs are playing havoc at this point in time. How do you read the latest set of developments in the US?
These kind of opportunities like tariffs, etc., they really allow you to shortcut your sales cycle. So what you would have otherwise achieved in 1 to 2 years, you're able to achieve it in 1 to 2 quarters. I would say in 3 to 4 years from now, these things should be good for India and by extension us.
Welcome back. Well, the markets are now sitting with a gain of closer on 50 points or thereabouts. The Nifty Bank, that's the one that's shown some weakness here again. That's trading in the red. Mitesh is back with us. Mitesh, a quick word on the Nifty Bank and fill us in with your picks as well.
I think in both the indices are basically consolidating is just that Nifty Bank had a fairly big outperformance. Therefore, I think last few days I've seen that there might underperform a bit, but no directional bias in both the indices. So then I believe that the rainbow outlook will continue. And you might not get much from trading the index. Unless I think we try to buy it near to lower.
Okay. All right, Mitesh. Now, what about final stock calls? Any advice before we get into the midweek break?
So, I have a BTSC on paid industries. Looking at the stock just below 45,450. And a target of maybe around 46,000 can be looked at. Paid is slightly, not very liquid, so you might have to tactically paid, but it's available in F&O. That's the advantage. And the other stock which I have is a BTSC and Persistent. It's today negative, but the overall structure for me is very positive over here. So Persistent, I would take a stop just below levels of 50 to 90 and a target of 53.75 can be.
Okay, let's talk about the other big story today. IndusInd Bank MD and CEO Sumant Katpalia has stepped down after the derivative accounting lapse. This follows the resignation of Deputy CEO Arun Khurana. The bank has now set up a committee of executives to oversee operations. Ritu joins in with the details on this. Ritu.
Well, accounting lapses at IndusInd Bank triggering top-level exits, as we had reported. Now you have the CEO, Sumant Katpalia, stepping down from his position effective yesterday, nearly 11 months before his term was to end in March next year. This is the third major exit from the bank in just this year, with the CFO stepping down in January, even before the derivatives discrepancies were disclosed, following which the Deputy CEO, Arun Khurana, resigned earlier this week, and now, of course, the CEO himself. Now, in light of this, the Reserve Bank of India has approved an executive committee to oversee the operations of the bank. That will comprise of Soumitra Sen, who is the head of consumer banking, and Anil Rao, the chief administrative officer. And this committee, in turn, will work under the guidance of the oversight committee, which will be chaired by the chairman of the bank, that is Sunil Mehta. Now, these exits come after the Grant Thornton independent investigation identified some of the key people that were responsible for the lapses, in light of which, of course, now the board has taken action to realign the roles and responsibilities. This is a clear fallout of the derivatives discrepancy, which will lead to a near 2,000 crore rupee hit on the bank's P&L, and that comes on top of the 600 crore discrepancy in the microfinance portfolio, which is still under audit. The impact of both of these is expected to be accounted for in the fourth quarter itself, and that may lead to the bank ending the quarter marginally in the red. Now, in his resignation letter, Sumant Katpalia himself said that he was stepping down as a matter of moral responsibility for his acts of omission and commission. For now, this executive committee will be in place for 3 months or until a permanent new CEO is appointed.
Okay, that's IndusInd Bank. So more flux and for the time being a little bit of uncertainty. Ritu, thank you very much for that. Stock, however, has recovered. The market hopes that this transition is going to be pretty swift and there will be, a new leader at the helm very soon. Let's move on now. We have, of course, an eye on auto sales, because when we come back on Friday, a lot of those numbers would have already come through. So what are the expectations? How has April been for the auto OEMs? Sudarshan's here with some perspective. So what can we expect?
So it's largely looking muted. As far as Vahan retail registration data is concerned, most of the sectors, passenger vehicles, MNCVs, or say two-wheelers have seen a growth, but it's in single digit. For passenger vehicles, registrations have seen a growth of 2%. For two-wheeler, again, it's 2%. And for MNCV, it's again 5%. But as far as wholesale estimates are concerned, here, passenger vehicles may see a growth of 4%, but for two-wheelers, it might see a decline of 13%. MNCVs may see a decline of 3%, and as far as tractor is concerned, there might be a decline of 1%. Now, coming to the company-wise number, in two-wheeler space, two companies that might report a growth, and these two companies have been reporting growth, and those companies are Eicher Motors and TVS Motor, and Bajaj Auto and Hero Moto will continue to report report decline. For Bajaj Auto, sales may fall, wholesales, I'm talking about wholesales, may fall 1%. For Hero Motor, there might be a decline of 16%. For TVS Motor, there might be a growth of 12%. And for Royal Enfield or say Eicher Motors, there might be a growth of 6%. Now in the passenger vehicle space, Maruti Suzuki may report a growth of 4%, while for M&M Auto segment, growth might be for almost 15%. As far as Tata Motors is concerned, there might be a decline, and here decline can be of around 3%. And for Ashok Leyland may report sales like it might be flat if you compare year on year. Tractor space, M&M may see a growth of 1%, but for Escorts, it might be a decline of 7%. So as far as wholesales are concerned, the picture is looking mixed. Some companies might report a growth, and these companies that will be reporting growth have been outperforming, but certain companies which have been underperforming for the last few months may continue to see a decline.
Yeah, absolutely. And I mean, M&M incredible. Month after month, we talk about 15% growth, right? So, I mean, even on that high base, I mean, they're really managing to charge ahead almost on a monthly basis. I don't remember the last time we saw a monthly or a quarterly miss from Mahindra & Mahindra. But anyway, on a separate note, Ather Energy. So the IPO is finally subscribed, but it's not gangbusters, right? Fairly muted so far, at least, when I saw the numbers last.
It's a second pure EV play, and finally on the third day or say on the last day, its IPO has got fully subscribed, and as of now total subscription is of around 1.3 times, and company had a fresh issue of 2,626 crore and OFS is of 1.1 crore shares, and price band that company has fixed, it's in the range of 304 to 321 per share. Now the data that I had taken just few minutes ago, or say till 1:30 p.m. I had taken, and till that time, retail was subscribed 1.5x, QIB was subscribed 1.3x, NIs was 0.3x, and employees, it's like oversubscription that we are seeing on the employee front. Here the subscription is around 4.2x, and QIBs of total offering that company is making, it forms around 54%, and here as of now subscription is 1.3 times, and NIs that form 27%, they have just subscribed as of now 0.3 times. So subscription is largely being led by QIBs, employees and retail. Now as far as Ather Energy had also raised almost 1,340 crore from anchor investors, and if you take a look at the list of anchor investors, some of the big names are there, and those names are Abu Dhabi Investment Authority, Singapore's East Spring Investments, Morgan Stanley Investment Manager, and US PIMCO, Samir Arora's Helios Mutual Fund and Helios Capital, UK's LMR Partners, and Hong Kong's Ovata Capital. So finally, at on the last day of its IPO, company has managed to get the total subscription, and it's currently subscribed 1.6x.
Interesting. Sudarshan, thanks a lot for that quick update. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, who joins us on the show. Hi, Mayuresh. Since we discussed autos, what do you like out there? And give us a quick take on Ather. Ola wasn't a very good experience for a lot of investors, but now they're betting on a next name. Your take on this EV theme?
Afternoon, Nigel. Now, again, I think if you probably look at numbers, right, numbers are not encouraging by far. And therefore, I think how numbers will play out, specifically on the bottom line, is going to be extremely critical for Ather as well. And therefore, I think when you're talking about how numbers will play out, how competition intensity is expected to play out as well, you've seen all the big players in the space have their launches done. They are having some teething issues there as well. How pricing will play out. I think all those things are going to matter a lot. And let's not forget, I think the overall ecosystem in terms of dealerships, distribution, after sales are a very critical component in terms of the entire ecosystem as far as two-wheelers or even four-wheelers are concerned. So my own sense is that within the two-wheeler pack, a stock like a TVS Motor, which has done exceptionally well, the expectation still continues that the kind of dealers, distributors that they are adding on are quite significant. The expectations of them able to maintain their EBITDA margin should be quite significant as well. Their EV launch, the iQube, is expected to do reasonably well. It is doing reasonably well. But as they scan other markets as well, I think the expectation largely in terms of volume and price related growth should continue. So for Ather, I think my own sense is I will give it a pass. I think you've got better, bigger players who are probably doing a lot more, who have done a lot more, and therefore TVS probably remains top of rack as far as markets with India is concerned. As clear disclaimer, this stock remains onto our global portfolios, and global clients may be owning this.
Mayuresh, hold that thought. We will slip into a very short break. We'll come back in about 10 minutes left as we count down to today's trading session.
Well, the market's clearly nervous in today's trading session, and the breadth of the market is telling you the story. Mayuresh Joshi is still with us. Mayuresh, some of these AC makers, there was a lot of talk that it's going to be a scorching summer, so some of them should do well. However, reports are now indicating that the sales haven't been as good, both for refrigerators as well as for ACs. How do you approach this theme? Stocks like Voltas had run up in anticipation. Blue Star, in fact, has come off close to 15-20% in the last 1 month or so. Your take?
Well, numbers have been a little bit disappointing for Apple, Nigel, no two ways about it. But I think the expectation is that with scorching temperatures happening over the last few days and last couple of weeks, and expected to remain so well through May, well through June, the sales should rebound quite significantly. Significantly, again, I think what you probably see in terms of the dealers and the distributors that have increased, specifically in tier 2 cities, I think it's no longer a phenomena that remains stuck to urban cities. And therefore, the penetration perspective in terms of AC sales to cooler sales is going to improve drastically over the next few quarters. Having said that, I think from an immediate near-term perspective, my own sense is that recovery should probably happen over the next couple of months. You should see a significant amount of recovery, both in terms of volumes as well as pricing. And therefore, I think the kind of underperformance that all these stocks have probably exhibited at this juncture, and Blue Star probably has remained one of the most resilient stocks, Nigel, over the last few weeks, last few quarters, as far as this entire segment is concerned. I think the kind of market leadership that they probably got, the kind of models that they've probably introduced, the inverter sales specifically within their AC models, which have shown a steady, stable uptick. I think that should probably continue. So my own sense is that not too perturbed with the kind of fall you've probably seen. There is some sense of recovery that can get expected. Blue Star still remains top of the list.
Okay, all right. Mayuresh, hi, good afternoon. Good to have you on the show. I'm just looking at some of the result reactions as they've played out. Vishal Megamart definitely stands out, right? But what solid growth, 20% plus kind of growth, almost quarter on quarter. Stocks up 10%, by the way, right now. That's Vishal Megamart. This year, it has done better than the Nifty, better than the market, with a gain of almost 11% for 2025. That's today's performance. Obviously, it's a recent listing, so that being the caveat. Your thoughts on the retail space? And would you buy any of these?
So, Surabhi, I think I'll have a close watch. I think Vishal gave super numbers, but even V2 retail as an example, or V-Mart retail as an example, I think if one really assumes and presumes that consumption will come back for both factors, one, I think because of the budgetary announcements done and the tax cuts that have got announced, the first half and specifically the second half coinciding with the festive season should see a huge rebound happening specifically in tier 1 cities. As far as tier 2, tier 3 cities are concerned, which is more semi-urban, rural in nature, the expectations of better monsoons this time around. Rabi output will be out in the markets. If monsoons are better, and one hopes it should be, the Kharif season should be equally good as well, with an equally better Rabi season to follow. Would mean rural discretionary spending and rural discretionary consumption should come back very, very strongly. And because I think the presence of Vishal Megamart, V2 retail, V-Mart is largely and predominantly in tier 2, tier 3 cities, along with tier 1 as well, I think a mix in terms of recovery of rural consumption along with urban consumption should probably reflect in numbers being better in the second half. Again, the mix that V-Mart and V2 retail have is predominantly apparel compared to a Vishal Megamart, which is 44% apparel and the rest between FMCG and other discretionary. And therefore, I think the margins for V2 retail, V-Mart are relatively better. Same sales store growth should also start holding out. And because of that, I think core dynamics, both in terms of average spend, the expectations in terms of revenue per square feet, and SSG growth should probably improve quite significantly in the second half. So I'm keeping a close eye on these apparel makers, which in my opinion should do well in the second.
By the way, just pointing out, guys, that the tire stocks have done really well today.
Yeah, CEAT.
CEAT, look at CEAT. We had a conversation with the management in the morning and they were sounding very, very unperturbed, frankly, by whatever's happening in global markets, quite confident on the domestic business and even on the international business. They're saying Europe is steady, OEMs are not showing any nervousness, and they are planning to build on their US business, US as a key export market as well. The stock's rock solid and steady. There's Balakrishna as well. There's Apollo Tires. So in general, tires in top gear this afternoon.
Absolutely, and doing very well, all told. Apollo Tires is the other one. With Apollo, of course, there was a news flow that they're shutting their European subsidiary, which has been losing money. So a bit of a late reaction coming through, but it's there today. Let's just quickly put up the Zomato eternal expectations, because the numbers are tomorrow. And that's the other one, which I think should be in focus when we come back on Friday morning. I think there's a net loss, which is the expectation from Zomato. 33 crore loss. This is, of course, this is not a poll. If you have the graphics, we should be able to pull this up. This is Jefferies analyst who's expecting net loss to be at about 33 crores compared to a profit of about 175 crores. Okay, revenues are, basically that's the point. And there is at the margin some, actually Jefferies has estimated that food delivery GOV will actually fall on a quarter-on-quarter basis. I think this should be the first time ever on a Q-on-Q basis food delivery GOV comes off. I mean, if not as the first, it's quite rare to see it. But that's Zomato for you. The other bit, of course, this entire large selling which will happen on MSCI because of the FDI restrictions, which the company is announced recently. Mayuresh, any thoughts?
On Reliance, when Reliance Retail came out with their numbers, they said that they're actively marketing their, they're going to actively start marketing their quick commerce or under 30-minute delivery by creating a separate tab in their app for such deliveries. And this segment has seen a 2.4x quarter-on-quarter growth for Reliance Retail. So basically, more competition is coming in the quick commerce space, which delays their path to profitability, at least in quick commerce.
Any sector with decent size, visibility, profit pool competition, right? I mean, huge, tremendous amount of competition, which is actually the lesser spoken about factor when we look at businesses, industries, etc. Mayuresh, 30 seconds. Any thoughts? Zomato.
We would wait for numbers, Prashant. I think, honestly, I think they have been accelerating their dark stores, and that's the strategy that they've adopted. And clearly, it's to counter competition quite clearly. Rima was just mentioning Reliance. We are hearing about Amazon. We are hearing about other large players who are also probably trying to do some localized bit in terms of food delivery as well. And let's not forget the local kirana walas who are probably up there as well. And therefore, I think the competition is going to be intense. Numbers are going to be soft, not just for this quarter, I think for the next 2 to 3 quarters, because their expansion spree is going to be very, very aggressive. So I think I'll wait out for numbers and then take them.
Thank you, Mayuresh, for joining in. As we close out today's trading session, market slipped in the last 30 minutes. So we're closing with cuts of about 1/3 of a percentage point, 75 points lower on the Nifty, 24,260, Sensex down 200 odd points. Banks underperformed, the Nifty banking index down 400 points, but many NBFCs, whether it's a Bajaj Finserv, Bajaj Finance, losing more than 5%. Mid-caps declined. The mid-cap index down over 1%. When we started the show, the mid-cap index was down about 0.5%, but the sell-off accelerating. The small-cap index ending with a cut of more than 2%. Onto the losers list then, Bajaj Twins right on top. Trend, which is also very expensive. Today, Trend has breached the 50-day moving average. Tata Motors under pressure, along with that TVS Motors. Street is awaiting the auto sales numbers. State Bank of India reports numbers on Saturday, along with